You are watching Market Watch, the brief overview of the key events from the world of finance. Traditionally, on the first trading day of the week, the saturation of the news background will not be high, but by the end of the week, the United States will report on changes in GDP growth rates and the price index for personal consumption. Many analysts consider the price index for personal consumption as key to forecasting the Fed's actions. Therefore, its unexpectedly strong decline may have a significant impact on stock indices, the US dollar and gold. Indeed, in this case, we will again talk about the Fed's willingness to lower the key interest rate, which is a bearish signal for the US currency and bullish for gold. Given the rapid rise in quotations of key US stock indices, which occurred on Friday, buyers need an additional incentive for further growth. Recall that the hype was caused by abnormally strong revenue growth of Nvidia, the largest video card manufacturer. This is not a structural change in the overall market situation, although it indicates a general trend in the development of one of the key areas of the technology sector. Nevertheless, this growth is a threat to other sectors, because they feel a shortage, which can lead to bankruptcies and a significant cooling of interest and risk. At this point, it is important to pay attention to the precious metals market, which, despite the statements of the head of the Fed that a premature rate cut is not advisable, is restrained from developing a more powerful wave of decline. This indicates a fairly high level of risk hedging. Therefore, a decrease in the yield of U.S. government bonds, which may occur in the event of an active discussion of a rate cut by the Federal Reserve, will push the precious metal quotes up. But in the event of an increase in the consumer price index in the United States, gold may come under pressure from sellers. Traditionally, we conclude with a brief overview of the cryptocurrency market. Bitcoin continues to test investors' patience, hovering around $52,000. At the same time, buyers are still keeping the situation under control, preventing a drop below the key mark of $50,000. Despite the fact that the general direction of the market remains upward, it is difficult to exclude a scenario that takes into account the development of a correction to the level of $48,000, which adds uncertainty to the cryptocurrency market. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.